person who has already visited us on this chapter, visited some of the members in their houses, in their companies, so she's quite known to the members. Let me introduce her officially. Surabhi is a software engineer turned entrepreneur. Over the last 2 decades, she has co-founded and successfully built 2 businesses before ultimately selling them. Following her exit from a technology company in Mumbai last year, she relocated to Dubai, where she currently operates a strategic advisory company to small and medium-sized enterprises. Her primary focus lies in helping business owners maximize their business value by leveraging her expertise in financial management, enhancing value proposition and growth potential. She's an avid reader, yoga practitioner, and proponent of human potential. Please welcome Surabhi.
Good afternoon, good evening, everybody. It's a pleasure to be here. Sorry. Is that okay?
No.
Thank you. So before I begin, I have a few questions for all of you here. I'm assuming all of us are private limited companies and nobody from public limited company. Anybody here from public limited company? Okay. Anybody here knows value of their business? You have equity in your business. You are part owner or full owner of your businesses. Does anyone here know their value of business, approximate value of business today?
Only by the book.
Only by the book. That's only one part of value. Has anybody ever done any acquisition or sold any business in the past? So you kind of understand a little bit of that. Going a little away from the business, I'm sure all of you own some of the other property. Before you acquired that property, you did a valuation of that property. And I can challenge that even today, all of you know approximate value of that property, and if you sell it tomorrow, how much will it fetch you? When you consider what's my net worth, you consider all your portfolio, you consider all those properties, and you think this is my net worth. But your biggest asset, which mostly you control, not the market, not so much of the market, not so much of the other people, you do not know the value of that, and you are not confident to add that value in your own net worth. Why is that? So we put in all this effort and we don't know what's his worth other than what we take home month on month, year on year, and over the years. So this is the biggest challenge and therefore objective that I have today, is to create this awareness that business value, understanding, knowing our own business value is extremely important. And if you know it, multiple opportunities open up. You kind of become a lot more open-minded with the possibilities. And second objective that I have today is very high-level strategies, how we can maximize this business value so that we kind of get more returns on our investment when the time comes. One more thing before I begin. I'm not going to share anything groundbreaking here. There is nothing new. All of you are extremely seasoned, experienced entrepreneurs in your own rights. I stand here as a gentle reminder of things that you must have forgotten, put on the back burner, deprioritize in your busy business and growth of that. So my request here is in the next 30 minutes that we spend time together, go within rather than looking for what's new, because I'm not sharing anything new. You all know it. So go within, see what applies to your unique business situation, your own story journey here. And I'll be more than happy if you get one actionable from this conversation and you start something tomorrow in terms of maximizing your own business value. Right? So that's cool. For some of you who still don't know me, my name is Surabhi. I have had the privilege of creating 2 businesses along with my husband. So we co-founded. Elixir and Fitness was a service and retail company that started later. Tejara Technologies is our flagship. started in 2003, got really excited with the great opportunity that was presented. Without knowing much about the fitness and health and wellness service retail business, jumped into it and did that. Even though it was a very short stint for 4 years, that's the company, that's the business that actually transformed me from an engineer to a business owner. Because even after starting Tejora, I was still an engineer coding and doing things, not really owning the business. So that business pushed me because it's service and retail, it's so cash daily thing that I became a business owner. 2012, a celebrity trainer acquired us, and all that knowledge and all that understanding I brought back to Tejora and fully focused there. 2019, when I decided to exit Tejora, all that learning that I understood from Elixir and then built Tejora accordingly came in the picture. And today I stand here. It took 2 years for me to really prepare, present, and finally complete the sales and exit from the company. And I stand here today as a culmination of all that knowledge and wisdom of 2 years of selling the company, both the companies actually, but Tejora was really intense. So let's go a little deeper. Today I will, right now in this time that I'll cover, why is it important to actually know your business value and how it helps? What are the motives from the buyers or investors when they actually look at any business? Once we understand that, we can connect. Later we'll see what is really business value. Like you said, you just know it from the books, right? But it's much more than that. And what are the key drivers? How we can look at a little bit of high level strategically to how to maximize these key drivers. And then finally I'll walk you through my own personal story of my sales and how it happened, the emotional journey of it. So to me, yes, strategies and everything is important, but from the awareness point of view, like I mentioned, one of my major objectives, this is where we are. 53% of business owners want to stop working in next 10 years. 48% business owners really want to exit but do not know how. They do not have any exit strategy. A lot of family businesses here, a lot of hopes from fathers that their sons and daughters will join their businesses. 4 out of 5 here say that they would rather take the money from the business sale. They would rather have their father as a mentor, but they would start their own business, a new business that is more relevant today, than actually go and join an old business that their father started. So that's the story. And finally, 100% of all of us will exit our companies one day, all of them, right? So now it becomes a question of what legacy we will leave behind. So once you understand this data, you can imagine that from the beginning of our journey, from the beginning of our business, it becomes important to create value in our business. I understand, and from my personal experience, I understand that you cannot imagine maybe today that you'll separate from your company, you'll separate from your business ever. But if you know the value of the business, opportunities expand, and you will sleep so much more peacefully knowing that one day, like your properties, which are valued at certain price, and you like that they appreciate, that one day you can sell it, and if you sell it, what will you get out of it? So all the years of hard work, all the years of blood and sweat that is put in there, what is the ROI that you are going to get when time comes? It could be your best possible comfortable retirement. It could be your opportunity. You could be just bored of your business and want to start something new, or go and join your son and daughter in their own journey and be their mentor and support system. It could, your life priorities could change, and you may need more time for yourself to really do something for your own life. For the younger guys, younger businesses, even securing working capital, here somebody, in the summertime, you lose something and you get a facility. You will get those facilities, working capital gets better once your value of your business on the books also shows much better and higher. So this is the most important reason why everyone should, all of us should get aware of this number and work towards it. That was our story, right? That is we as entrepreneurs, how it helps. Now looking at it from the buyers or investors side, what's their motive? Why would they want to buy? Very simply put, most of you are aware of it. I'll just categorize it. The profit potential and value creation, guys, the wealth accumulation, they're after the money. If your business is cash flow positive, if you're issuing dividends, if you're every month you're booking your profits, they like that, and that's why they would be interested in your business. Value creation and wealth accumulation. Most of today's startup investors fall in this bracket. They don't want everything quickly, but they're okay to wait. But they will invest at early stage and they'll walk the journey. And towards the end, when their exit is promised, the wealth creation that they will have will be humongous, multifold, not just lyrical, right? Strategic growth and strategic partnerships are buyers or investors. Let's say somebody wants to expand in Middle East and all of your businesses you run in Middle East, you understand this region, you understand the language, culture, what sells, what doesn't sell, and they may be interested in you acquiring, merging, or investing in your company so that you become their local partner, local presentation here. That could be most of the banks today that we see, two competent competition joining hands to make it a bigger entity. So these are examples of strategic partnerships and strategic growth expansions that people will have. Industry expertise, if you have an intellectual property, patents, trademarks, something that is unique to you, proprietary technology, something that they cannot live without and that accelerates their own growth, and therefore they would want to have that with them. Entrepreneurial opportunity, somebody just wants to have a business, doesn't want to start it from scratch, have a lot of money and wants to just leverage the existing platform that somebody else has created. So these are typically the motives, that high level categorization of why somebody would want to buy or acquire or invest in a business. My idea here is once you understand your own benefits and you understand why people look at you, then we strategically can plan in which direction was our role to maximize our business value. Because if we go in all different directions, we go nowhere, right? So this is where the now meat of the whole, what's the business value like and what are the key drivers. Very briefly, very high level, they can be categorized into intrinsic and perceived. When you say you know it on paper, you know your intrinsic value. And in that intrinsic value also, you know only tangible value. Within that, again, you can break it down into intangible. So your intellectual property, your customer base, your competitive advantage, how you do your things, all of that could come under non-tangible, intangible. And that has its own value. Your goodwill for all these years of work that you have been doing in the market, that's your goodwill. What's the value of that? If somebody wants to recreate that, how long will it take for them? So there has to be price attached to that. So these are, that's intrinsic value, separated and split into tangible and intangible. Perceived value is how market, industry, world sees your business or your industry. What's the growth potential? How can you grow? Or is it a already saturated market and you have a ceiling? Or this is region specific, you can't go beyond this? What's the brand equity, customer perception of your company, right? What do they think of, what customers and industry think of your business and potential? So what happens is, intrinsic value is little bit in our control and we can increase that. When we plan on maximizing value, this is where we should focus because that feels like more in our control. Perceived values, of course, you need to influence the world with your own marketing, with your own talking about your value proposition and taking it from there. So, tangible value, intangible value, and perceived value. These are the three major blocks of any valuation. All of them work hand in hand very closely. Nothing can be ignored out of it. This is a little dense slide, but I wanted to have it all in one view. So please allow me to elaborate. All of you know all these parameters. There's nothing new here again. I just wanted to get a cross connection between how people perceive these values, right? So financial performance, again, diversified revenue, your cash flow, your net profit, non-negotiable. If these numbers are not really impressive, nobody is looking at you, period. So that's given. Now, let's say your sales is increasing, but your margins are stagnated. It's a poor leadership, it's a poor financial discipline, and you're a leaky pipe. Nobody wants that again. So, importance on the management team, importance on your operational efficiency, and how you really treat money that is coming in the business becomes extremely important here. Intellectual property and our competitive advantage. You must have something. Every business has it. We just don't pay attention to verbalize it, but it is extremely important that you do it. We are a lot of service companies here, I believe, and service companies typically tends to think that what IP can I create? I don't have any intellectual asset, intellectual property to claim. But your competitive advantage, it could be just a process. It could be a small proprietary technology piece that you have written. All of that becomes important because that gives you an upper hand over your competition. And you need to know it, you need to talk about it, your customers need to talk about it, and therefore give you business. When we talk about customers, again, loyalty of the customers, do they refer to you to the next customer, to the next person? Do you have recurring revenue? Show stability of your business, show predictability of the business, which is again very important. You don't want every month to start doing from zero, right? Or even every year for that matter. Operational efficiency here, very tricky. Doesn't come under tangible, doesn't come under intangible, doesn't come under perceived, but that's the engine that fuels everything here. When you talk about how well you can scale, but you cannot substantiate how your operational efficiency will support that, operations will support that, then you're just an idea, and there is no value for idea per se only, right? So ideas ki koi kami nahi hai, we say. It's an execution, and if you're not capable of that, if your company is not capable of that, it's a small cross in front of you. Growth prospect. Now, if you're looking for an investor, let's say you get a blank check, how will you use it? How will you really expand? What are the opportunities that you see? If everything is made available to you, do you really know where can you grow? Where will you grow? If you can't verbalize it, you have to do it today. Because otherwise, you don't have a plan for the next year and 5 years later. So what will you give it to the buyer or investor that is coming in? All of this can work very well and can be very attractive, but again, look at the risks, and it could put a big dampener on your value. Now, risk, when we talk about risk, simply put, and I have personally experienced this in my own journey, if your biggest part of your revenue is coming from, let's say, 2 or 3 customers, it's a risk. If your customer relationships are strong, but they're hanging on one person's whims and fancies, and his ego can be, or he can move from this company to another company and you're going to lose your business, it's a risk. These small aspects of the business also can put a dampener on your overall valuation. And if you want to de-risk it, then this is something that you need to pay attention. A small customer we ignore, but that's tomorrow going to come and bite you at the wrong place. On the other side, when you lose a big customer, when you lose a big contract, and you still survive, when somebody has not paid you and gone down under, for me, UAE Exchange was my 3rd largest customer, so I know the pain. If you don't get paid, then you still survived. You survived COVID, you still thrived. It shows resilience in the company. It shows the maturity, the stability, the people, leadership. It shows a lot of those things. So you may have those flips, but how well did you come out of it? All of that comes together. So it's not just one parameter, but how they talk to each other and how they communicate about each different parameters becomes very important. So I'm covering it really fast and very high level. Too much is not, a lot of things are not said here, but I think we can go to the next piece here. So my personal journey on how the sale happened. So I'll start with decision and I'll walk. I wish the tunnel was longer, but I didn't get the picture to show the length of the journey here. So, like I said, the company was started, Tejora had started Okay, so I'm doing this for the first time in a structured format, so allow me to go a little on different paths, but I'll come back. Uh, 2003, we started, me and my husband, Nitin, we started the company. I went into Elixir, came back. 2012, after we started working, being a technology company, we started working purely for US markets. 2012, when I came back to Tejura, after 2 recessions of US, we had learned our lesson. We started looking at India market. Our competency in technology was open source, so banks, and we took it to banks in India, and they really loved us because of the cost cost benefit that we could give. So everything was working very well. India's BFSI sector was really treating us nicely. We were growing steadily, exponentially steadily. Ended up building 2 fintech products within the company, using the revenue coming from services, pumping it back into doing the product development. So throughout our time, I mean, I'm very proud of this one fact that we stayed self-funded, never ever borrowed it. I mean, borrowed from cash credit facilities from banks, but stayed always on our own. Enjoyed the freedom of it. In 2017, early 2017, when things were really going great, momentum was good. In an accident, Nitin passed away. And like I said, our life priorities could change. Here, my life changed overnight. So within 40 minutes, world can go from here to there, crashing. And then I'm on my own, taking care of both sets of parents, taking care of almost 200 employees, 25 banks and financial institutions customers. Everybody watching me was going to be my next move. So tremendous pressure, tremendous sense of duty and responsibility, and I had to show up. That's all I knew, that I had to show up every day. And I tried doing all of that. Nitin used to take care of all our finances. I never ever did any payroll in all these 17, 18 years of our life. I never bothered about my cash flow, if it is there, if it is not there. He managed however he managed. I looked at all operations, business side of it. And when this happened, I didn't know debit and credit. Trust me, I didn't know debit and credit, which number goes where. And I had to start from there. He had a lot of other, I'm saying a lot, but he had other businesses. So it took 2 years, long story short, it took 2 years for me to consolidate all his business and operations, stabilize myself and my family, stabilize the business, give them sense of confidence back again. I must say here, my team and my customers, I understood the real value of all our work in those times by these people, including my customers. I mean, as much as ruthless they can be when the negotiations happen, but they supported. And I mean, in India, it definitely happens where they have gone all out of their way to do that. 2019, coming back here, 2019, when I was at peace, business was growing, I felt a sense of calm. Now we are on the growth path again. Somebody actually approached me and mentioned if I ever would like to exit and sell my business, I should then contact with him. Until then, I had not even thought ever that this is an option that exists in front of me. Like, we never think, right, what will I do? And constantly I'm thinking, what next? What next? I've never done this without Nitin. I don't want to align with anybody else. On my own, I can only do this much, right? My heart wasn't in it anyway, and I was extremely exhausted. So I started taking that option seriously into consideration. I hired a broker. We are not a really large company, right? Where the investment bankers will come in and start doing the work. So there are brokers. I hired one. Very quickly, I fired them because until then, I was very much at peace that I'm doing my thing. The moment this option came, me in my naivety and me in my hurry, I thought, I want to do it now, right now. I want to exit. I don't want to now wait for this to happen, right? I was the sense of urgency, and they played on it. They played on it in the brokers. They played on it saying that your revenue is this much, you have these products, you have this great customer base, and your value should be this high, and we are going to sell, and we have a perfect buyer for you. All the clickbaits all the baits basically. And I fell for it. And what happens is, when you are kind of that desperate, and I didn't care for the money actually speaking. I thought everything that I own today is because of this company, so I got my value. I just want to exit. And then a very wise man said something to me. He said, Surbi, this won't sell for cheap. Either this will sell or it will not sell. Because even cheap is a high price. So you need to be patient. And it literally stopped me in my tracks. And I realized that I was the problem in this whole process, right? It was my naivety, it was my immaturity, it was my hurry, sense of urgency, all of that. And then I had to stop the process actually. And what happened is, I completely became dispassionate. I started focusing purely on numbers rather than what opportunities and selling that opportunity to anybody. Because in the first time, what I realized is I was selling passion and they were looking at it professionally. So our language was different and it didn't make sense at all. I had to learn that very hard way. And when the numbers started, I literally hired a costing accounts guy. For my size of business, to get a full-time costing accounts guy was unheard of. I had a great advisor who actually helped me through this process. And that in itself, the numbers, when I started understanding it, my own business from that perspective, my mind literally opened up, understanding what are the possibilities that I'm looking at. How great is my business, not just in opportunity and excitement, but in numbers as well. Extreme financial discipline. Because after Nitin, I didn't know anything, so I went on finance on steroids. I went on controls on steroids, right? So it put me in a very great position in terms of showcasing the strength of the business. And that all became attractive in addition to a lot of other things. So deals that I must have spoken like 5 or 6 guys, prospects. I must have got LOIs from 2 or 3 people. Like I mentioned, the motives that buyers will typically have. Here, they will either come with the earnout, where they don't have right now want to invest that much money. So earnout is something that they will give me an option of, they will own my 100% of my company. They will make me work in my own company as an employee of theirs, and they'll keep paying me for almost 1, 2, 3 years time. And that's connected to the performance that I will bring in. And so there is no guarantee of the money, there is no money. Time-wise, it's not guaranteed, and I'm just high and dry, could be, which I didn't want to take. Then there were some few financial investors interested in the money aspect of it. And I knew that they'll simply break down my company. They will either sell it in different parts and pieces, or they will flip it to another bigger entity after cleaning up, polishing, doing something more on it. So these are the deals that I wasn't interested. I wanted a clean deal. I want somebody to come in, take care of my guys, take care of my customers, and continue what I built. So finally, the deal that I did take was a US-based company with operations, with offices already in Hyderabad, as in India. They had done one acquisition a year before, which told me their objective was to bring all these companies together and create a much larger entity. They came from exact same background, software, technology, product services. They understood the psyche of my guys and they treated them nicely. So, and then of course the deal was one shot, 100% equity, 100% money. I also matured in promising I will stay for 1 year. Due diligence process itself was for 60 days, and in that process, the buyer said that your processes and your systems are for 50 times bigger than your organization. But that gave them so much confidence that they actually said 3 month full time, 3 month part time, need basis, I can stay or I can go. So actually I got my exit in 3 months time, because the team was really strong, team was really robust, and all of them continued staying with the next entity. So he was, the main owner and the company was at peace. And so everything worked out well in the end. Today, in retrospection, what worked in our favor, and this I will connect to the key drivers that I mentioned on the few strategic points. Very strong financials, cash flow positive. I put in a discipline that every month we are going to take some money and put it in the fixed deposit. It could be as small as a small developer's salary, but we'll do it. That's how I started. And we will not touch it no matter what. If you don't have enough money, go and borrow it from the cash credit facility from the bank and put the interest as a cost. But that's how it will be, and that's how we will operate from there. Collection process, extremely disciplined, full-time person almost appointed who would do just that work to get the collections in time, right? So there was a very strong robustness. My company was extremely clean. The books, from no personal expenses, no profit, no fudging of the data to save tax, no piracy in the company, all my non-competes, all the compliance related things, everything clean and clear, no legal issues, no employee issues, all of that was great. We had a lot of insurances, and like you said, business insurance is very important. I had insurance for myself. I sign somewhere and tomorrow something happens, I'm protected, all my directors are protected, all my employees are protected. I've seen companies who do especially work with banks, a smallest of the simple developer in his infinite wisdom at 12 o'clock at night, poor thing, can create one mistake and that can put the entire company, because bank will sue you in Indian words, whatever, to protect their reputation. And I've seen companies really going down because of this one specific issue. And then again, I went on the other side, getting all these securities provided for us. So safeguard the organization, safeguard the people in it. That showed a maturity, level of maturity on our side to the buyer when we did that. Competitive advantage, now this is where it's years of work, and I was lucky that we somehow had it already within the company. Speed of delivery was our competitive advantage, and that the entire company culture was built around that one specific thing, that how do we give speed when others can't, and more than them. And that's how we charge our premium when we work with these banks, right? So many of these things, the great team, which was proven again, 2 fintech products. Personally, if I had to grow my own company in coming times, I would have actually, at least one of them, I would have hyped out and created played a whole startup game on that particular product. So that's the scalability and that's the growth potential that I showed to the coming in buyer. With all these things, these are the things in my own opinion worked in our favor to get the deal done for us. Finally, we live and learn. If I have to do it all over again, I think just 2 points main that comes to my mind. I would have started building value in the company and monitoring that number from the very beginning, rather than just last 2 years putting everything together and try to see how best we can present ourselves. And second is too much generalization. In the early stage when we were small, you want this, we will do this. You want this, we will do this. You want this customized, we will do that also. So we were scattered all over the place. It took a lot of courage and guts to say no. And we are specialized in this, and this is what we will do. And that's where the efficiency comes in. That's where the conveyor belt kind of story comes in. And we get to really save cost, build a stronger sales engine, which again becomes very attractive because it fuels everything in the company later. So that's mostly my story here, and that's the learning as on today. Questions? We have covered all these points. Planning and execution is something that I'm not even getting into. So, Q&A.
If anybody has any questions, first of all. Any questions from the guests or the members?
So, are you available as a consultant for SMEs to now come on board and guide them through the journey?
Yes. So now I realize the more I'm talking to more people, like I showed on the slide, They don't know what's next. They know that someday they may have to stop working, there could be not somebody else, or they may have to bring in professional management. All personal and family businesses finally divest, right? Today nobody from JP Morgan and Gucci works in the company. And if you want to continue your legacy, then you have to bring in professional management. That means divest. When you divest, what's the value of your share? What's the value of your equity? They don't know that. Or they want to sell and exit, they don't know how to do it. So that's where I'm actually right now very big time advising, consulting. And like Leo Tolstoy said, every happy family is in the same, every unhappy family is different. Here, every business has their own unique challenges. I can't even say in the same industry two businesses are same. They are not. So it takes, my work goes much deeper and much longer term rather than just one conversation and end of it. So I get involved in the business, I see what are the issues, where because of what aspects the value could be lower, and we work, and it's a long process. Let's not even think. I was lucky because some of those things were built in, therefore I could manage it in 2 years' time with all the struggle and trial and errors. But start sooner is what I would say, and that's what I've been offering right now here. Yes, please.
So you were mentioning a lot about financial discipline.
Yeah.
You were mentioning quite a bit about financial discipline. So my question to you is do you have a set of financial advisors along with you when somebody approaches you for advice, or do you look at just the holistic approach and tell the company to get financial aid, financial consultants, and etc. to do the job?
So I personally, like I said, in 2017, when after Nitin, I didn't know what is debit and credit. So I wouldn't even claim that I understand finance to the degree where some of the experts are sitting here. I don't have any team per se that I go with. We can always collectively together, we can always look for people.
She's hiring me now.
Sure. And personally, I think every business owner knows their business and the challenges. What I'm only bringing here is you have never thought of this aspect of your business. And once we start thinking in that direction, it's not a rocket science. If I could do it, most of the seasoned business owners will be able to do it. It takes mindset though. It takes mindset that what is important and where I say no, and that discipline is most important. And yeah, I mean, answer is I don't have any team per se. I work on my own.
First of all, it's a really inspiring journey, and I really appreciate. Just want to check, where is this company standing now? The company which you have sold.
So PrimeSoft acquired that, and I exited in 2022 early. They are right now, as on today, they continued for 1 year. They continued operating as Tejora independently. Just the tagline underneath changed, PrimeSoft company, and now they're actually merging. So what the benefit to my guys, my company, was more of US customers that they couldn't service from their own Hyderabad office. My existing customer base, which was India and a lot of banks, we work with a lot of Indian banks like Axis, Yes Bank, RBL. We work with a lot of securities and trading companies. We work with consulting companies like Deloitte and BCG. These were all big contracts already signed and vendor empaneled. So they are leveraging more on that. So nothing magically, miraculously changed, but they got access to almost 200 engineers, and my company got access to projects and technologies which are mostly US, Canada based, and that exposure increased. Otherwise it stayed as same.
Well, firstly, I mean, hats off to you what you've done. And regarding, I mean, I just wanted to say something about what you mentioned about you had a lot of people coming to you and telling you your business is worth this much, and that I think all of us have seen it happening umpteen times. And I always believe that what the business owner can understand the value of the business, no outsider can. Right? It is just taking a step back and seeing that, okay, if as a business owner I were to today buy a business like this,
Yes.
how much would I be willing to pay if I were to pay? So that is when you will realize what the real value of your business is. Because being internally in the business, in the same ecosystem, many times we as business owners do not realize that value, what we have created. But when we take a step back and then look at it, probably we'll see that value, and I think that's what you did.
So intangible, like I showed on my slide, intangible is where most of the deals will fail because business owners tend to overvalue the business. I have this brand and I have this technology and I have, sorry. So in intrinsic, when you have intangible and tangible, my IP is worth this, my technology is worth that, I have this brand, that's where most of the deals will fail because it's subjective, right? You were saying, I'm saying our opinions, that's it. So,
And I think, it was in one of the speeches I heard from the
Vice chairman of Infosys or someone in Kuwait, he was visiting, and I got the chance to hear him out, and he mentioned one very critical thing that stayed on with me, the value to price ratio.
yeah.
So the price, which, as I say, valuation is an art, right? So there is no scientific, there is of course a science behind it, but as long as the price that I am paying for the value that I am getting, so if the value to price ratio is more than 1 for me, for the price that I am paying, I'll always be happy. And similar thing applies to the seller, right? If the value, what he is getting in terms of the money that he is receiving, right, in terms of the price that he's paying by giving away that business, if that value to price ratio for him is more than 1, he'll be happy. So ultimately it has to be a win-win for both the
Personally, from my side, I've learned a lot of things from your naiveties. Because of you being naive, we have learned a lot in the room. Your journey for the last maybe 3-4 years, 5 years after your husband
So,
passed away?
6 years.
6 years.
Yeah.
And I think the transformation that you have gone through,
Yeah.
we could see it with a short span of time. We all have, personally, I've seen some of the faces going, on a different tangent. Thank you very much for sharing your very let me call Vijay, please. We'd like to share a small token of appreciation.
Thank you.
Vijay, please share it from us. Please.
Thank you so much. That was
Thank you. Thank you.
Thank you very much. So now we are getting to the last part of the session. We'll be sharing our experiences which are coming up shortly, and we'll also be sharing what CC Global is going to do for the next few months. And I believe when I was going through the updates from CC Global, if we leave now from the room, probably you will reach Vietnam for their convention. That's to